Hello, hi. Welcome to Trading Robert. It's always a pleasure to have you with me. As we try to dissect this market, as we try to make sense into the candlesticks, as we try to create strategies that are relevant for the today's market. So, as you can see on your screen, today we are going to look at 4-hour oil trading strategy. And as per my previous video, we looked at the double bottom. So today we are going to look at the double top and how I consider trading a double top effectively and profitably. And I get my pencil, okay, so we can try to dissect this market. You can see that this market was on uptrend, was going up. We don't know whether it's an uptrend or, but it was going up clearly uh, until until this level where the market hit a snag and again and came down. All right. But because of the nature of this candlestick, this market did not give enough sign that because what do you call this candle? This candle is not engulfing per se. It's neither here nor there. All right. Um, yes, it can show the market is in a downward channel. There's a very high selling pressure up here, but it's not enough. All right, for me personally, there are people who take it as a sell trade, but for me, it's not enough. So what do? I wait and see how the market will react. You see, it only came down slightly, and then there was a lot of rejection down here. These weeks, you can see there's a lot of price rejection around this area. Everybody is pushing it up. So what you do in this scenario is you wait and see what the market will perform at this level here. Okay, at these levels here, because previously these were the market uh, was rejected and formed a nice resistance level here. So what happened after that? The market tried to push up and formed a nice resistance level here. Okay, so for me, I consider this as a double bottom because you can see from the no, not a double bottom, sorry, a double top, because you can see the market formed the first top here was rejected, then came back and formed the second top. So how I trade this, how I would teach you to trade this is the second double top should be lower than the first. As you can see, there is some, sliding line from this first one to the second one. It is a lower high. Okay, when you consider this as a first high, then this is the second high, which is lower. So for me, this is a perfect double top. And it clearly indicates that the market will definitely be pushed to the downward. Not definitely, but there's a high probability the market will go down. Sorry, this market, there is no a definite answer. It is only a probabilistic answer. So, and true to this, the market since then has been going down, right? And remember, this is 4 hours, so these are huge pips. And being an oil market, remember, oil market moves very fast. It has accumulates a lot of pips in a very small move. So these are huge pips that will have made you a handsome return, all right? So for me, my double top trading pattern is that the second top must be lower than the first top. It doesn't always work, but is my strategy. And then wait for an entry signal. What was my entry signal? Could have been my entry signal was this bullish now. Not bullish, this bearish, but engulfing candle. You see it engulfed this first one here, and actually engulfed the next one, two, three, four, okay, and part of the fifth one. So this was a very nice entry trigger. So I would have uh, entered here, okay, uh, and then maybe set my stop loss above that, okay, but I would have set it above here, uh, above. Let me clear this, you know. I would have maybe put my entry uh, there and put my stop loss there. Because for me, if it breaks this level here, then the market might is not no longer valid for me. So, and you can see the market tried to push up slightly, but it was pushed down again, and the market was pushed down. Sorry, let me get the arrow. It was pushed down. So the market tried to push up, did a slight pullback, but ultimate direction is on the downward. So guys, learn to understand the market, learn to interpret what the market is telling you, and because that is all that you need. You don't need any other complicated or fancy, or I see appealing looking strategy where you need to do mathematics, have the oscillators, have the divergence, have the volume indicators, have the you know Fibonacci's. You don't need all that to make a very simple decision. Keep it simple because that is what will ensure that you're not confused. It will ensure that you understand the market. And by the interpreting the candlesticks is the best thing because even all these indicators are made based on the price. Candlestick is an indicator of price. All these other lagging indicators are based on the price. Okay, the EMAs, the SMAs, the oscillators, the MACDs, they're based on the price. But so you can use them. I'm not saying don't use them because you can use the MACD to check divergence. You can use the oscillators to check divergence and momentum. But at the end of the day, what you need to do is predict the direction of the market. And if you can do that easily without involving all of them, then the better for you, the more good you are. So, guys, again, if you have any query or comment, please leave it down there for us, and I'll